All right, let's talk about this week, because this is not just another week in the markets. Nope. Think of it more like a gauntlet, a series of really intense challenges, and any one of them could send stocks soaring or tumbling. By the time we're done here, you're going to know exactly what these challenges are, and way more importantly, how to watch them unfold. And really, it all boils down to that one big question every single one of us is asking, right? After we get through all this, where is the market actually heading? So let's do it. Let's break down the 6 key events that are holding the answer. Look, we gotta frame this the right way. These are not just, some news items on a calendar. These are real hurdles the market has to clear, one by one. And the first one? Oh yeah, it's arguably the biggest of them all.
So, challenge number 1, the Fed's next move. Right, all eyes, and I mean all eyes, are on their 2-day meeting for the final verdict on interest rates. This is that single moment that is going to set the tone for everything else that follows.
Okay, so here's the exact schedule you want to watch. The meeting kicks off on January 27th, but let's be real, the real action is Wednesday, the 28th. You've got the policy statement dropping at 2 p.m. Eastern, and then, right after that, Fed Chair Powell's press conference at 2:30. That half-hour window, that's when you can expect volatility to go through the roof. So what's the crucial point here? It's all about the signal they send. It really just comes down to a choice. Are they going to sound dovish, hinting that rate cuts could be on the table because the economy's slowing down? Or do they stay hawkish, stressing that inflation is still the main enemy and that rates have to stay higher for longer? That choice is going to have immediate, and I mean immediate, consequences. So how are we going to know the market's verdict instantly? Well, you're going to watch these 5 indicators. Think of this as your instant reaction checklist. The yields on the 2-year and 10-year treasuries, the US dollar index, NASDAQ futures, and of course, the VIX, the volatility index. These will tell you the story in real time, no delay. All right, so while the Fed decision is definitely the biggest economic challenge, there's this other one, a more political one, looming on the horizon. We're talking about the threat of a government shutdown, a potential self-inflicted wound coming straight out of Washington. You're going to want to circle this date on your calendar, January 30th. That is the deadline for a partial government shutdown. And believe me, it is looming large over a week that's already completely packed with market-moving news. So what's this all about? Well, the source of the conflict is a really specific political fight over funding for the Department of Homeland Security. And because it isn't about the entire budget, that's what makes these negotiations so tricky and, frankly, so volatile. Okay, so why should you care about this for your portfolio? Simple. A shutdown injects a huge dose of uncertainty into the market. And what does uncertainty do? It can trigger what we call risk-off selling, and this is crucial, it can delay the release of key economic data that everyone, and I mean everyone, relies on. It's just a shock to the system. Now, beyond all the political drama in Washington, there's another major test for the market this week. This time, it's coming from the corporate world. Yep, it's big tech's big test. And the question is pretty simple. Are the giants still growing? And these reports, they come thick and fast. You've got Microsoft on the 27th, then it's Meta and Tesla on the 28th, and it's all capped off with Apple on the 29th. Now, because these companies are just so massive, their results don't just affect their own stock, they can literally move the entire S&P 500. But look, this isn't just about the headline earnings numbers. The real dilemma for investors, the thing everyone's trying to figure out, is this. Is all this money being poured into AI just a huge spending spree that's crushing their profit margins right now? Or is it finally turning into a real profit engine, one that's generating strong, tangible cash flow? The answer to that question is what will determine if these stocks fly or fall. So while the market's laser focused on all these domestic issues, there's always the risk of an external shock, right? Something coming out of left field. And this week, that risk is coming in the form of new tariffs and that specter of trade wars. And hey, this isn't just some theoretical risk we're talking about. A headline like this shows the threat is very, very real. I mean, talk of a potential 100% tariff on goods from a major trading partner like Canada, that immediately puts markets on edge. Why? Because it affects everything from inflation to corporate profits. Okay, so beyond all those big headline risks, there's that constant stream of economic data that investors have to be watching. This week, the focus is really going to shift over to the bond market, an area that has a direct and really powerful impact on stock prices. And just to give you a sense of the scale we're talking about, this week alone, the U.S. Treasury is going to auction off around $70 billion worth of 5-year notes. And that's just one of several massive auctions that need to find enough buyers. So how do we know if these auctions are actually successful? You've got to know this one term, the auction tail. So what is it? It's basically the gap between the yield investors expected and the yield they actually got. And a large tail? That's a huge red flag. It's a crystal clear signal that demand was weak. And here's why that matters: the ripple effect. See, weak demand means the Treasury has to offer up higher yields to attract buyers. Then, those higher bond yields make safer government debt look way more attractive than stocks, and that puts downward pressure on the whole stock market. See? It's all connected. Okay, wow, we have covered a lot. The Fed, a potential shutdown, big tech earnings, tariffs, bond auctions, it's a lot. But if you can only watch one thing this week, what should it be? I'm about to give you the single number that ties this whole story together. This is it right here, the 2-year Treasury yield. More than any other single data point out there, this is the number to watch this week. I want you to think of the 2-year yield as the market's fever thermometer. It is the most sensitive indicator we have to what the Federal Reserve might do next and to any inflation fears. Its direction, whether it's ticking up or ticking down, is going to give you the fastest and clearest signal of where market sentiment is truly heading. So let's put it all together. Here is your cheat sheet for the week. Number 1, the 2-year yield is your fastest signal. Keep your eyes on it. 2, watch to see if the Fed's tone and the demand in those bond auctions are telling the same story. 3, when it comes to tech, focus on their guidance and spending plans, not just the past earnings. And number 4, remember that shutdown threat? It's all about one thing: uncertainty. Okay, so now you have the full framework for navigating this gauntlet of a week. So as you watch all these events unfold, I want you to ask yourself this: is the market building up the strength to climb this wall of worry, or is it about to trip on one of these hurdles? The answer, well, that's going to define the next big move.